Good afternoon, everybody, and welcome to the VAT Domestic Reverse Charge webinar from ourselves at David Allen. So today's webinar is going to be a little bit shorter than usual for some people who come to our seminars. Probably the reason being that I don't end up going off on a tangent because I can't hear you. But we are going to try and condense and summarise the legislation that's been announced and hopefully make it a little bit easier to understand how this is going to affect you in your business. So my name is Amy Johnston. I am a business services and software specialist for David Allen. I deal with a range of clients that are CIS registered, so contractors and subcontractors or both. So hopefully I'll be able to answer any questions. Due to the nature of the new legislation, I'm not going to do the live Q&A session at the end like I normally would. I am going to send a follow-up email to all attendees, and if you've got any specific questions to your business, then please use that opportunity to get back in touch with me. So we'll go straight into it. What is the VAT Domestic Reverse Charge? Now, this is a new system that's been designed to avoid VAT fraud in the building and construction industry. It's designed to help ease the burden of VAT on subcontractors. And HMRC have described the reverse charge as a major change to the way VAT is collected within the building and construction industry. Now, where the VAT reverse charge applies, contractors are now going to account for the VAT due to HMRC instead of the subcontractor. So effectively, we're going to stop paying as a contractor the VAT over to that subcontractor and pay it straight to HMRC on their behalf. So this change is going to come into force where the VAT tax point of a transaction is on or after the 1st of March of this year. Now, the tax point as divided in the VAT rules is the earlier of the invoice date or the date that the monies are paid to the subcontractor. Now, HMRC has put a little bit of anti-avoidance in there for any invoices that are dated prior to the 1st of March. The normal VAT rules will be able to apply as long as that invoice is being fully paid before the 31st of May. So what they're trying to avoid is effectively lots of subcontractors sending invoices to contractors dated the 28th of February for the next several months of work. So if the payment is made after the 31st of May, but you've had an invoice dated prior to the 1st of March, you still will need to apply that reverse charge to that transaction. This will also apply to any self-billing invoice arrangements. So a lot of subcontractors, especially on larger contracts, they won't actually send an invoice over. It will just be the remittance on a self-billing arrangement is sent over with payment. So the rules are exactly the same if that's the case. So who is this going to affect? Now, this charge is going to apply to all standard and reduced rate VAT services that occur within the construction and building industry. So for this to apply, the criteria must be met for both the contractor and the subcontractor. Now, you'll note that I've put customer and supplier in brackets on that slide. Now, the reason that I've done that is because that is the terminology that HMRC is using throughout the guidance, which is maybe there just to confuse us all, but it does help keeping that in your mind when we go on to the flow charts that I'm going to come over on the next few slides. So for this reverse charge to apply to a transaction, both the contractor and the subcontractor must be registered for VAT, and it must be a CIS supply. So meaning if you would normally deduct the CIS and the VAT registered, you're going to need to apply this reverse charge. Is it going to apply to your transactions? So as I mentioned before with the customer supplier, HMRC has released these flow charts to be able to determine whether it's normal VAT rules or reverse charge VAT rules that are going to apply. Now you'll note that this one's for the contractor. So you read this through as a contractor to determine whether you should be withholding VAT on behalf of the subcontractor. Now, you'll note that the first question is the supply made by an employment business? Now, this is really, really important. If you are a contractor that has subcontractors working for you that you have provided via an employment agency, so for labour only, the reverse charge does not apply if you pay the agency. That is because the agency is providing you with a supply of staff as opposed to a supply of a CIS service. The second question is the supply received within the scope of CIS? So if it would normally have CIS deducted, yes. Is the supply standard rated or reduced rated? So 0 rated, there's no VAT applicable. So that wouldn't come into this, and the normal VAT rules would apply because there'll be no VAT change in hands. If it's standard rated for any sort of normal building works or reduced rated for things like renovations, it is still applicable. Number 4 is a statement that says, I have confirmed with my supplier, the subcontractor, that I am an end user. Now, the end user status within these rules is really important, and I've got a dedicated section to that after we've gone through the subcontractor template. So as you can see, if we followed all of that flowchart down, the domestic reverse charge would apply. Going on to the subcontractor flowchart that's now on your screen, a lot of the questions are the same as the contractor, but you'll note that the question number 5 is, has the customer or contractor provided confirmation that it is the end user? So that's what we've really got to think about. It's always going to be the contractor that can confirm this end user status. It is worth noting, and I've put this on the slide, because of the nature of the supply chain within the construction and building industry, many businesses will be both a contractor and a subcontractor. So it's worthwhile having a look now before this is going to take effect to see what contracts that you have that are going to be affected and how it's going to impact cash flow, which I'll go on to a little bit later. So notification. So as a contractor, you need to notify your subcontractors that you pay that you will be applying the reverse charge. And if you're a subcontractor, you should receive notification from the contractor that you work for to say that this is going to apply or not to you. I have created a template letter for contractors and a notification to send out to their subcontractors, which will be sent out after the webinar, and please feel free to use that as you see fit. We've also, on the next few slides ahead, we've also got a new invoice template because this needs to go onto your invoices as well. So I will show you that too. So going on to end users. Now this can take a little bit of getting your head around. So I have put examples in, so fingers crossed they make sense. So for the purposes of the reverse charge, end users are consumers and final customers who use the supply of those CIS services for their own use. So effectively, it means that there's no onward supply of those services that are being supplied within the supply chain. They've absorbed them, they're that final customer. The end user must provide details in writing to confirm that an end user for the reverse charge not to apply. So we'll go through a little example here. ABC Limited and DEF Limited are both VAT and CIS registered. DEF would like some work completed on their building by ABC. As the supply of services, it's not going to be sold on. It's their own building in their own yard or whatever. They're not doing this as part of a sale to create income from for themselves. This is something that they're absorbing as a cost. As it's not going to be sold on by DEF Limited, they are the end user. So therefore, this reverse charge won't apply, but they must advise ABC Limited of this in writing to make sure that that's all thing, that bit of paper that says that this is in writing is really important in the view of a HMRC investigation. Other examples of this would be things like domestic customers, but they're not likely to be VAT or CIS registered anyway, housing associations or property developers. As an extension to the end user status, there's also something in the legislation about intermediary suppliers. Now, intermediary suppliers are customers who make an onward supply of these services to another person or another business without any material alteration to that supply, but they're connected or linked to the end user. Now, to be classed as connected or linked to an end user, the intermediary supplier must either share a relevant interest in the same land where the construction works are taking place, such as a landlord owns that property and is paying for that, there's a long-term tenant involved, which would be the end user, or be part of the same corporate group or undertaking. Now, that one's got a little bit more to get your head around, and that's what my example's focused on the next slide. Again, the intermediary supplier must provide details in writing to confirm that supplier for the reverse charge not to apply. And this written notification that I'm talking about, this can be written into a contract for the works. It can be a paper document, an electronic document, it can be done by email. It just needs to have some sort of paper trail evidence that you need to retain, because if HM Revenue and Customs do a VAT investigation, say, why hasn't this reverse charge been applied? That is your evidence, because they said that they were the end user. So go on to a quick example for this. So Property Company Limited is part of a corporate group, and it has subsidiary companies being Fantastic Flats and Amazing Apartments. Sound like I'm reading from a GCSE textbook, but please, let's skim over the corny names. Both subsidiary companies require renovation works on their properties. The Builder Bob Limited is subcontracted to supply this work. Property Company Limited has then made payment to Builder Bob and will be recharging the cost of this work to both Fantastic Flats and Amazing Apartments. As neither of these companies is going to provide a further CIS service, they are the end users. And therefore, as a corporate group, Property Company Limited doesn't need to have the reverse charge applied to this transaction, provided that they've informed Builder Bob that they're an intermediary supplier in writing. I hope that makes sense. Going on to invoices. The invoices that are going to be subject to the reverse charge need to show the following information. So all of the information required is normal on a VAT invoice, ensuring that the invoice states that the reverse charge applies to the invoice and that the customer is the one to account for the VAT. And then also show how much of VAT is due under the reverse charge, or the rate of the VAT reverse charge to be applied if that can't be included. The VAT amount should not be included in the amount charged. Sorry, got a frog in my tongue there. So in the VAT, if you see this example that's come straight from HMRC, in the VAT column where the normal amount in pounds of VAT would be, you can see that there's no amount put in there, and it just says reverse charge applies. Now, this is an invoice with 20% taxable supplies and 5%. And you note at the bottom of the invoice in the bold, HMRC's suggested wording is customer to account to HMRC for the reverse charge output tax on the VAT exclusive price of items marked reverse charge. That's fine. We're going to be advising our clients to show the amount of VAT in there. So you can see my little note underneath. In this example, this is the amount of VAT that will be subjected to. So I will be slightly tweaking that wording in bold to say for the reverse charge output VAT of 47,500. Now, the only reason that we advise that is because that figure should then tie up directly to that contractor's VAT return in the event of an investigation. It is just to protect yourself. So on your VAT return, what's going to change? So if you're a subcontractor and you have had payment from a contractor who has withheld the VAT from you, all that's going to change on your VAT return is you won't put VAT due in box 1. The box 1 is your output VAT on sales. Your box 6 will still show the net amount of sales before VAT. It's just that there's nothing due. Contractors, on the other hand, at the moment, under the current rules, you've got that payment you've paid to your subcontractors is in the input VAT box on purchases of box 4, and the net amount of that purchase is in box 7 of your VAT return as the net amount of the purchases. What's going to now happen is you're also going to include the VAT element in box 1. So even though you've got it in box 1 and box 4, so it nets off effectively in your VAT return. However, we've always been claiming it back. So you do need to think of this for cash flow, and I will go into that a little bit more detail. Box 6, though, for the sales, you are not going to be putting the net amount of those sales for the contractor in your box 6 because it's gone onto their VAT return. It doesn't hit your sales box whatsoever, apart from the VAT element in box 1. It's important to remember that sort of when you come into doing your VAT return, if you're using software and you're under the Making Tax Digital regime, a lot of software is geared up to do this for you. So I've got a slide on software later on, and if you've got any further questions, we can discuss it in a little bit more detail after the webinar. But a lot of the software is going to do this for you. There is some key considerations that we need to be thinking about in terms of what this is going to mean for our businesses. So one of the biggest ones is cash flow. So subcontractors are no longer going to receive the VAT element of their invoice from their contractor. So they're going to receive less money. Now, yes, in the next VAT return, they should be paying that over to HMRC, but sometimes that can be 3 months between receiving the money and making payment, sometimes 4. So this is going to be not in our bank account anymore. So we need to make sure if we've been banking on this in order to buy materials for another job or things like that, we're not going to have that VAT money to play with as if it's our own for that time scale. It is a short-term problem, but it is one all the same we need to be thinking about. On the other hand, contractors are going to be withholding that VAT that they would normally pay the subcontractor in order to pay over on their VAT return. So we've got that same time period of 3 to 4 months where we're going to have money sat in our bank account that isn't ours to touch. I would advise having a separate bank account, if you've got that available, to transfer the VAT at the time of payment to the subcontractor so we know it's there. We don't want to be looking at our bank balance, or if you're working in a finance department, you don't want your directors looking at a bank balance going, oh, we've got lots of money, let's go and buy lots of nice new things. Then the VAT bill hits and that money be gone. In order to make sure that this has the minimum impact on your cash flow, make sure all of your invoices are up to date. The money coming into your business right now is as up to date as it can be. Tightening up on that credit control, making sure if people are straying from them payment terms slightly, getting it sort of in place now so that you're not waiting for further monies if needed. And if you have got any old debts, obviously we have got our recovery solutions department, so please get in touch and they'll be able to advise you if needed. Another consideration is the VAT scheme that you operate within your business. Now, this is going to affect subcontractors more than contractors. Now, if you're a subcontractor where all or the majority of your supplies are going to fall underneath this new reverse charge, it may be more beneficial for you and your business to move to monthly VAT returns so that if you're getting repayments from HMRC and VAT on the input VAT of things you've bought, you're getting that VAT back quicker. Now, if we do the VAT return for you, if you're the David Allen client, we will look at all of this for you and we'll advise if you think that's the case and it'd be beneficial for you. But if not, just have a look at that the first VAT return you do after this reverse charge comes in. Are you getting a big repayment? Would it help cash flow if you were getting that repayment more frequently? Another point is using the flat rate scheme. If you use the flat rate scheme, reverse charge supplies do not come into your flat rate. So because contractor is keeping hold of 20%, you've lost all benefit. If you're currently on an 11% flat rate scheme, you're gaining 9%. That's going to go. We're not getting that anymore. So if you've got the majority of supplies under reverse charge, it might be beneficial to come off the flat rate scheme. And then you can be claiming input VAT back on things like your fuel, any purchases you make, any workwear, so on and so forth. Again, if you are a David Allen client, we complete your VAT return for you and we'll look into the most beneficial option for you. Another one that's a little bit confusing because it differs from the CIS rules is split supplies. So currently, under the CIS rules, to deduct CIS, you would split between labour and materials, you would only deduct CIS from your labour element, so on and so forth. Under this, for VAT only, the CIS treatment does not change, but for VAT reverse charge, if we have labour and materials on two separate orders, but they're going to be provided at the same time on the same site, the reverse charge is going to apply to it all. So again, I've done another little example for this. So ABC Limited has placed two orders with DEF. The first order is for the supply of materials, which is a staircase, no CIS. Then the bloke that was going to, that's really sexist, apologies, the person that was going to go and fit this staircase is now, he's gone off sick. So they've got to place a second order with DEF for the actual labour for fitting this staircase. Because the staircase and the labour of that are going to be applied to that site at the same time, the reverse charge needs to apply to all of it. Even though that labour normally, the materials normally wouldn't be a CIS service, because they're being supplied at the same time, the reverse charge has got to be part of them both. We are holding, as a contractor, the VAT back for both of those orders. So I mentioned software a couple of slides ago, and is the software geared up to do this? Now, Xero has confirmed that 4 new tax codes has been added into their system, and they've named them the Domestic Reverse Charge, or DRC codes. They've got a 20% and a 5% one set up, and they've got them for income and expenses. So if you're doing the invoices, you can choose that VAT code, and it will do the VAT return in the correct way for you. QuickBooks Online has, as of the 2nd of February, which is when I last called them, they haven't said that there's an automatic update within the software, but they have said that the software will be compliant in time for the 1st of March 2021, and anybody that's got CIS within that software that they can identify as a user will get an email with how to do this. If it gets to the week before the 1st of March and QuickBooks have not updated this, I will be posting on our website a workaround for you to create your own tax code. So please do check our website if that hasn't came to fruition by then. For Sage 50, they've released a tax code in the latest version 26 update for tax code T21. Now, this is the 20% domestic reverse charge supply. If you do 5% VAT reduced rate, you will need to create a new code yourself, and all of the information on how to do that is on the Sage website. I understand that there's countless different options for software now, so if you've got any other software queries, again, please email after the webinar and we'll help you as best we can. So what do you need to do? I would go and get a new invoice template prepared to make sure. Some softwares will automatically do it, others won't, so double checking with your software provider if they're going to do that for you, if you're choosing the right tax code. Making sure that that section at the bottom is on there with the amount of VAT and it's not showing the VAT on the invoice. Ensure that your subcontractors, if you're a contractor, are aware of this change, aware that they're going to get to stop the VAT being paid to them. Double checking your software requirements and seeing if you need to do anything manually. Familiarising yourself with how this is going to affect your VAT return and how to complete it if the software is not doing it automatically. And review your cash flow to try and plan for any negative cash flow position. We know the cash flow is going to go negative now. There may be steps we can take to stop that happening. So this slide just, I'm going to email every single person that's watched the webinar today with the template, the handout slides, information, everything. Now this is going to come from my direct email address, so please feel free to come back to me with specific questions, or if you would like a follow-up call. The reason I'm not doing a live Q&A is just because it's so business specific. I'm going to be able to give you much better advice if you contact me directly and we discuss your actual business needs. So thank you very much for listening, and I do hope that I've helped in terms of being able to understand this legislation a little bit better. Got a couple of slides regarding our services and things, but I will be sending an email out to all attendees And as I say, any questions, please do get in touch, because I do appreciate it isn't the most easy of things to understand. So thank you very, very much for all your time.